Indian markets witnessed their steepest fall in over 3 weeks, with the Nifty 50 and Sensex ending at their lowest levels since 22 November. The Nifty plunged 360.75 points, or 1.49%, closing at 23,914.15, while the Sensex dropped 1,190.34 points, or 1.48%, settling at 79,043.74. Major draggers included Infosys and HDFC Bank, as technology stocks traded in red amid mixed signals from the US on monetary policy. The uncertainty over the Federal Reserve's future rate hikes weighed heavily on investor sentiment, leading to broad-based selling. The Nifty 50 dropped 1.65% to close at 23,873.35, its lowest since 4th November, while the Sensex fell 1.64% to 78,918.92. A broad sell-off across Asia-Pacific markets added to the pressure on Indian indices. Interestingly, HDFC Bank's stock hit a record high of 1,836 rupees and 10 paise before retreating, reflecting strong fundamentals and customer outreach. Market expert Aditya Gagar noted that Nifty breached its critical support range of 24,140 to 24,350, filling a bullish gap but ending significantly lower. Most sectors, except PSU Banks, media, and realty, were deep in red, with IT and auto stocks underperforming. On the daily chart, Nifty 50 formed a bearish candle, but technical patterns hint at a potential reversal above 24,350. Investors are now watching these key levels closely. Heavyweights like Infosys, Reliance Industries, HDFC Bank, ICICI Bank, and Mahindra dragged the Nifty 50, while limited losses came from SBI, Adani Enterprises, Shriram Finance, and Cipla. Sectorally, 9 out of 12 indices on NSE declined, with IT being the worst performer, while PSU Banks stood out as the best. Broader indices saw some resilience. BSE Small Cap closed 0.4% higher, while Mid Cap ended flat. Only 4 of 21 sectoral indices on BSE closed positive, with it-focused indices leading declines. Market breadth slightly favored buyers, as 2,241 stocks advanced versus 1,702 declining on the BSE, with 106 unchanged. Let's dive into the technicals of Infosys. Currently trading at 1,860 rupees, the stock is about 7% below its all-time high near 2,000 rupees. It recently faced resistance at these levels, leading to a pullback. On the downside, there's a strong support zone at 1,714 rupees, which coincides with a key historical level that has previously acted as a springboard for upward moves. If this support is breached, the next major level to watch is 1,373 rupees, which has acted as a long-term floor in the past. From a trend perspective, Infosys remains in a broad consolidation phase after witnessing a strong rally between 2020 and 2021. However, the volume profile suggests cautious optimism, with a gradual increase in buying around support levels. The stock is trading at a discount of approximately 7% from its peak, offering potential value for long-term investors, provided it sustains above key support zones. A breakout above 2,000 rupees could reignite bullish momentum. Looking at HDFC Bank's chart, the stock is trading at 1,793 rupees. Nearing its all-time high. A long-term uptrend is evident, with a consistent rise since 2013, as highlighted by the ascending trendline. This indicates strong structural growth over the years, with the stock steadily making higher highs and higher lows. Currently, the stock is trading just about 1.5% below its peak, signaling minimal discount from the top, reflecting investor confidence. A key support level is observed around 1,721 rupees, which has held strong during previous corrections. Breaking below this could push the stock toward its next support at 1,500 rupees. On the upside, the stock is attempting to break out of a prolonged consolidation phase. If it sustains above 1,800 rupees, it could mark the beginning of a new bullish leg. Investors should monitor the volume closely for confirmation of a breakout. For now, HDFC Bank remains a fundamentally and technically robust performer. Let's analyze Reliance Industries. The stock is currently trading at 1,272 rupees, showing a significant pullback from its recent high of 1,580 rupees, marking a discount of approximately 19%. This correction aligns with broader market sentiment but places Reliance at a critical juncture technically. Key support lies near 1,270 rupees, where the price aligns with a long-term ascending trendline visible since 2018. This trendline has historically provided strong support during market corrections. If this level holds, it could lead to a bounce back toward the resistance zone at 1,358 rupees. On the upside, breaking above 1,358 rupee will be crucial for any meaningful recovery, potentially setting the stage for a retest of the 1,500 rupee level. However, a break below 1,270 rupees could signal further downside, with the next support seen near 1,100 rupees. The overall structure remains bullish in the long term, but short-term trends require cautious monitoring. Let's analyze ICICI Bank's technicals. The stock is currently trading at 1,286 rupees, just below its recent peak near 1,400 rupees, marking a discount of around 8%. Over the last few years, the stock has been in a consistent uptrend, as indicated by the strong ascending trendline starting in 2021. The trendline has acted as a solid support for ICICI Bank during corrections, and currently, the price is testing this support. A bounce from here could potentially resume the upward trajectory, with immediate resistance at 1,400 rupees. A breakout above this level could pave the way for a new all-time high. On the downside, if the trendline is breached, the stock may retrace to 1,200 rupees or lower, where additional support is observed. Overall, ICICI Bank remains in a bullish structure, supported by strong fundamentals. Investors should watch volume and price action near the trendline for confirmation of the next move. Let's analyze Mahindra & Mahindra's M&M technicals. The stock is currently trading at 2,904 rupees, slightly below its recent high near 3,200 rupees, reflecting a discount of approximately 9%. After a strong uptrend earlier this year, M&M has entered a consolidation phase, holding its ground near the 2,900 rupee level. A crucial support zone exists around 2,650 rupees, which has historically provided stability during corrections. This level aligns with previous breakout levels, indicating strong buying interest if the price retraces further. On the upside, 3,200 rupee remains the key resistance to watch. A breakout above this level could trigger a fresh rally toward uncharted territory. Volume patterns suggest reduced selling pressure, indicating possible accumulation at current levels. The broader trend remains bullish, supported by consistent higher highs and higher lows. Investors should monitor 2,900 rupees as the immediate support and watch for a breakout above 3,200 rupees for the next leg of the rally. Please note, this video is for educational purposes only and should not be considered as financial advice or a recommendation to buy or sell any stocks. Always consult with a certified financial advisor before making any investment decisions.